Hey, Brian Steer, Steer Real Estate Team, hopping on with our mid-year housing review. Just want to give you a couple points as to why we feel that the housing market is going to continue to be strong moving forward. First of all, house prices are still appreciating. They've been appreciating for about the last 10 years, but right now they're appreciating at a much more normal level. And most economists seem to think that the appreciation is going to level off to a historically normal rate of 3.6% moving into 2020. So prices will still be going up, but they're going to be going up at a very healthy level. Two, interest rates are super low. The 30-year United States interest rate average is 8.27, with the high of that being in the early 80s at like 18%, which is completely insane. Right now they're hovering in the threes, 3.87, 3.82. They're hovering right in the high threes. Most economists seem to think that they're going to jump into the fours by the end of the year, but still that is ridiculously low. And with the rate of inflation and appreciation, you're almost, it's basically free money. And three, an impending recession does not mean that we're going to have a housing crash. Most economists do believe that we are going to go into a recession sometime in the next 18 months, but that is not expected to be driven by the housing industry. So what that means is that we are most likely will not experience any kind of devastating crash like we did in 2008. And if you look historically over the last 5 recessions, the prices have actually risen in 3 of those recessions. So if you go back to 1980, prices rose by 6.1%. 81, they went up 3.5%. 91, they went down a little bit at 1.9%. 2001, they went up at 6.6%, and obviously we had the crash in 2008 where prices dropped by almost 20%. But again, that market was a market that could not be sustained. We had way too much inventory, and once they regulated the mortgage industry and stopped giving loans to people that shouldn't have them, and people were not basically artificially inflating prices, once all those buyers disappeared, we had so much inventory that we couldn't sell through it without significantly dropping all the prices. Right now, we're still hovering below what a healthy real estate market inventory is. Inventory in every area is different. Certain areas here, we're around a 4-month inventory. A healthy real estate market is around 6. So with all those factors, plus the fact that the economy is in a good place, unemployment is low, wages are going up so people can afford more. So even though housing prices are rising, interest rates are low, and people are making more money, which means they can afford more. So if you take all those factors, it looks like the housing market is going to continue to be strong and healthy moving forward. Hope this information was helpful to you. If you have any questions regarding any of it, feel free to give us a call. Go ahead and drop me a message. If we can help you with any real estate needs, reach out, 609-425-9428. Again, it's Brian Steer, Steer Real Estate Team. Thanks for watching, guys, and we will catch you on the next one.